This hearing to order. We'll have people kind of drift in and out. We've got a vote going on right now, and then we've got another one that's going to be called in a little bit. So if you're testifying and somebody gets up and leaves, they're probably coming back. But it's as you all know, you're here at an interesting time. It's just a busy time, and a lot's going on. So welcome. It's my privilege to call the hearing to order. I would like to thank our witnesses today for taking time from your families, your work responsibilities to share your expertise with our committee today. As a proud Arkansan, I'm delighted to have Ben Noble of Little Rock, Arkansas on today's panel as well. This hearing is the third in a series of our committee our committee is conducting to examine the current state of America's rural economy from the perspective of our farmers, ranchers, lenders, and rural leaders. Having time to reflect on what we have heard in the previous two hearings, it's clear to me that a common theme has emerged. If we expect current and future generations of producers to not only survive but thrive, we need to pass a strong 5-year farm bill this year that strengthens the farm safety net and revitalizes rural communities, many of which are struggling to retain an adequate workforce to feed, fuel, and clothe the next generation of Americans. More than 70% of all counties in this country are rural, and agriculture is the number one industry in a large majority of those rural areas. While there are numerous valuable rural development programs in the Farm Bill that many of us on this committee champion, the most potent mechanisms for rural development are the risk management tools that our producers utilize to secure the financing necessary to grow and expand their operations, which in turn support the communities they call home. The economic activity generated by agriculture, this sector in rural communities supports everything from local retail operations that supply inputs such as feed, seed, fertilizer, and fuel to the grain mills, cotton gins, or other processing facilities that provide direct employment opportunities for local residents. Local governments count on that tax base to provide critical services and infrastructure needed to keep communities healthy and vibrant. Unfortunately, every member of this committee has heard directly from farmers in their state about the very difficult conditions they've endured over the past several years and are likely to face in the future if things continue the way that they are. While many of us have heard from ag groups for years now about the importance of getting a farm bill signed into law, I noticed a distinct change in tone beginning last summer as I visited with not just producers, but also their lenders. One banker in Arkansas then estimated that producers could struggle to secure financing for planting roughly 20% of the acres in my home state. Unfortunately, tough times are nothing new for our nation's farmer. They have endured many challenges before, but we've entered a scenario in which many economic indicators of the health for the agriculture sector, especially for row crops, are headed in the wrong direction and have been doing so for some time now. The $10 billion in economic assistance provided at the end of last year is a critical bridge for many farmers to secure 2025 operating loans. I appreciate the work of many members of this committee in securing this assistance and look forward to swift implementation by Secretary Rollins and the department. However necessary to ensure many farms stayed in operation for the upcoming year, this economic assistance should not in any way be considered a substitute for a 5-year farm bill. Whether you look at rising levels of farm debt, loan delinquency rates, or the percent of row crop farmers that need to refinance debt to cash flow, it's clear that Congress needs to act quickly to strengthen the Farm Bill programs. The suite of risk management tools should provide a critical backstop for producers and ensure adequate credit adequate credit access for all generations of farmers, but especially our young and our beginning farmers who we are counting on to carry on the honorable work of feeding the world. I look forward to hearing from our witnesses here today and putting their advice into action as we continue our work on the Farm Bill this Congress. Ranking Member Klobuchar will be joining us momentarily, so I'll now proceed with our witness introductions. Following introductions, the ranking member will deliver our opening statement. Leading off our panel today is Mrs. Tara Durbin. Senator McConnell was unable to be with us at this moment, but he is very proud to have Mrs. Durbin here before the committee today. I'm submitting Senator McConnell's remarks regarding Tara into the record. Without objection, so ordered. Mrs. Durbin served as Chief Lending Officer for Agriculture Farm Credit Mid-America, which is headquartered in Louisville, Kentucky. As a member of the organization's executive committee, she helps to strategize operations across Farm Credit Mid-America footprint, which serves residents of Kentucky, Tennessee, Ohio, Indiana, Missouri, and my home state of Arkansas. Mrs. Durbin understands the challenges producers are facing as she works alongside her husband and son on the farm. I look forward to listening to your testimony, Mrs. Durbin. Thank you so much for being here. Mrs. Doolin Oak, did I get that right?
Close enough. Delin.
Delin, I'm sorry. I didn't get it right. We're very pleased to have you. Ms. Hoke serves as the head of Rural Community Insurance Services. She also serves as executive member of the Crop Insurance and Reinsurance Bureau, a member of the National Crop Insurance Services Board of Directors, a member of the American Association of Crop Insurance, and her family farms in the home state of our ranking member. Ms. Dillon brings valuable insight to today's hearing through her leadership with RCIS and intimate understanding of how crop insurance impacts farmers and the communities in which they live. Mrs. Hoke, thank you so much for being here. I look forward to your testimony. And I believe Senator Ernst is going to introduce our next witness.
Yes, thank you, Mr. Chair, for the opportunity to introduce my constituent, Caleb Hopkins, who hails from Halber, Iowa, which is a tiny, tiny little town in Carroll County, which is west central Iowa. And if you go up Highway 71 from my neck of the woods, you're going to end up fairly close to where Caleb and his family live. So Mr. Hopkins is a loan production officer for Dakota Mac and serves as the chair for the American Bankers Association's Ag and Rural Lenders Committee, which he represents here today. Mr. Hopkins received his bachelor's degree in agricultural business from the greatest university in the United States, Iowa State University, go Cyclones, and later obtained an advanced degree from the Graduate School of Banking in Madison, Wisconsin. In addition to his work as a loan officer, Mr. Hopkins is an active farmer with his wife and 3 children, raising purebred Hereford cattle. And I am a Hereford fan myself. When I show for the governor's charity steer auction, it's always a Hereford. So thank you. We are all very grateful you could make it here today, and we look forward to your valuable testimony on how Congress can better serve, protect, and support our ranchers, farmers, and rural communities. Thanks for being here, Caleb. We appreciate you. Thank you, Mr. Chair.
Thank you. Now it's my pleasure to introduce to the committee a great Arkansan from a small community in the heart of the Delta, Mr. Ben Noble. Ben has grown up surrounded by agriculture and has done well to serve the industry for many years. Upon his graduation from the University of Arkansas, Ben made his way to Washington, D.C., working as a staffer for both Senator Dale Bumpers and Senator Blanche Lincoln of Arkansas. Blanche is up there. She's She's making sure you and I behave. We often hear about the mass exodus from rural America, that when young people leave, new ideas and innovation leave with them. Ben is the exemplary example of what can happen when those people return to their rural communities. Ben uses his experiences to help guide new ideas through his service at the Arkansas Hunger Relief Alliance, the Little Rock Chamber Board of Directors, Commissioner of the Arkansas Heritage Commission, and through his work in public affairs. Ben now serves as the Executive Vice President and Chief Operating Officer for Ricin Foods, based in Stuttgart, Arkansas. Ricin is the world's largest miller and marketer of rice, a major soybean processor in the Mid-South, and a staple for farmers and rural communities alike. Ben, thank you for being here, and we look forward to your testimony. Mr. Cedric Rowe. I'm pleased to introduce Mr. Cedric Rowe. Cedric is a first-generation organic peanut farmer from Albany, Georgia. Cedric owns and operates Rowe Organic Farms, where he grows peanuts, watermelons, sunflowers, and hemp. He is a founding member of the Georgia Organic Peanut Association, where he helps create markets for value-added agricultural products and supports small and medium-sized farmers in the Southeast. He attended Fort Valley State University, where he earned a Bachelor in Plant Science with a concentration in horticulture, as well as a Master's of Public Health with a concentration in environmental health. He is currently a candidate for a PhD at Tuskegee University for Integrated Bioscience. Cedric, thank you so much for being here. We look forward to your testimony. Again, thank you all for being here. Mrs. Durbin, you're now recognized for your statement.
Chairman Boozman, Ranking Member Klobuchar, and members of the committee, thank you for inviting me to testify here today. My name is Tara Durbin, and I'm a lifelong advocate for agriculture. My husband Dusty and I run a cash grain operation, and for more than 2 decades, I have also worked with Farm Credit Mid-America's customers in various lending roles. Today, I serve as Farm Credit Mid-America's Chief Lending Officer, where I oversee the agriculture lending activities. Farm Credit Mid-America is a customer-owned lending cooperative and a proud part of the farm credit system. We serve more than 145,000 customers in Arkansas, Indiana, Kentucky, Missouri, Ohio, and Tennessee. Together with 55 other farm credit associations, we are committed to supporting rural communities in agriculture with reliable, consistent credit. Over the past several months, this committee has heard from producers and industry experts about the challenges emerging in the agriculture economy. It is important for me to highlight that we are, in fact, seeing a tale of 2 worlds when it comes to the financial health of American agriculture. The factors that mostly common determine which farm economy is being felt include geographic region, commodity produced, farm diversification, and financial position. I've provided more in my written testimony, so I will just briefly describe the financial conditions that we are seeing. Row crop producers are facing headwinds. However, those in corn, soybeans, and wheat have benefited from several years of being able to build liquidity and reinforce their financial positions. Our cotton and rice producers, particularly our Arkansas customers, have faced multiple years of price volatility, quality concerns, and yield challenges, leading to more rapid liquidity erosion. The protein sector is a bit of a bright spot as it benefits from strong demand, limited supply, and lower feed costs. We are committed to working with our customers as current conditions are placing financial strain on many farmers regardless of age or experience in farming. Like other farm credit associations, we utilize several practices to work with producers through challenging cycles. These include proactively restructuring debt to support cash flow concerns, providing financial coaching and education, and using federal programs like crop insurance and the FSA Loan Guarantee Program to mitigate risk. Before I discuss the Farm Bill, I would like to recognize the importance of the assistance provided in the American Relief Act that was enacted late last year and championed by many on this committee. As we look to the future, American farmers must have certainty and predictability of a strong 5-year Farm Bill with additional federal investment that reflects today's market reality. My written testimony identifies a detailed list of farm credit priorities in supporting the next Farm Bill, and I would like to briefly mention 2 that are particularly relevant for this hearing. First, crop insurance is the cornerstone of the farm safety net and one of the most important risk mitigation tools available to our farmers. We support the strongest possible crop insurance program, and we applaud the committee for exploring ways to enhance this vital tool to improve affordability and coverage. Second, the FSA Loan Guarantee Program allows lenders to make loans to farmers who may not qualify for traditional credit. This tool is not only important for lenders when financial conditions in agricultural economy become more challenging, but also helpful when working with young and beginning producers. We thank Ranking Member Klobuchar and Senator Hoeven for their work on the PACE Act, which will provide critical updates to the FSA loan program by aligning the current cost of operating a farm with the loan limits. The future of agriculture relies on the success of our young, beginning, and small farmers. Every Farm Credit Association offers a uniquely tailored program designed to meet the needs of their young, beginning, and small farmers. Farm Credit Mid-America's program is called Growing Forward, which provides special underwriting standards and Tier 1 interest rates along with personal and business education programs. These Growing Forward customers are expected to create business plans and to work with their loan officers to receive financial coaching and make sure they're on track to accomplish their goals and support the operation's viability. Growing Forward supports young producers like Jordan Brewer from LaRue County, Kentucky. In 2021, he took over his grandfather's cow-calf operation while balancing school and working full-time as a nurse. With the help of Growing Forward, state and federal programs, and hard work, he has grown his operation and currently runs a 150 head cattle herd. Growing Forward was a critical resource that helped Jordan access the capital needed to secure his family farming legacy. In conclusion, thank you very much, Chairman Boozman and Ranking Member Klobuchar, for allowing me to testify today. Farm Credit is committing to fulfilling our 109-year-old mission, and we look forward to working with you as you reauthorize the Farm Bill. Thank you.
Thank you, Ms. Durbin. Mrs. Hoke?
Chairman Boozman, Ranking Member Klobuchar, and other distinguished members of this committee, thank you for allowing me the privilege and the opportunity to testify today on the importance of crop insurance and the vital role that it plays in providing risk management to farmers across the country and facilitating capital flow to the rural American economy. My name is Delynn Hoke, and I'm the head of Rural Community Insurance Services, RCIS, which operates as one of the 12 approved insurance providers, or AIPs. RCIS delivers crop insurance nationally, so we are proud to serve farmers in each state represented on this committee. I am a proud farmer's daughter, and I now also farm with my husband Emery and my brother Dan in the great state of Minnesota. I learned a lot of lessons on the farm. I learned the importance of generational values, honesty, integrity, faith, hard work. I also learned that sometimes we faced terrible losses that came with large hail, flooding rains, and weeks of drought. In 2016, I was the CFO for Zurich North America when we acquired RCIS. And it was one of the proudest moments in my career when I was able to call my dad and tell him that we had just bought a crop insurance company. And now this last year, I've had the privilege to become the head of RCIS. So this conversation today, it's personal for me, not just as the head of an insurance provider, but as a farm owner and operator, and perhaps most importantly, as a farm girl who saw how crop insurance protected us, allowed us to continue to farm when it mattered most. I do thank those of you on the committee and other policymakers who have worked hard to continually improve our farmers' most important risk management tool. Crop insurance is an economic driver in rural America. It is critical to the flow of capital for our farmers as it secures the operating loans they need with the banks. Imagine if we had to pay all of our expenses at the beginning of the year before we get a paycheck. That is exactly what our farmers have to do every year with all of their input costs. Crop insurance not only secures loans and protects the farmers when they suffer a loss, it also spills over into the local economy, empowering ag retailers and other local businesses, often the first line of unsecured debt to the farmer. The last several years have seen a drastic increase in ad hoc disaster payments to rural America. It is only prudent for this body to be looking for ways in the next Farm Bill to plug these gaps in the safety net. We ask that you consider crop insurance as the primary tool to help fill these gaps. We discourage the creation of any disaster program that would disincentivize farmers from purchasing crop insurance. Request recognition that companies do incur costs for administering aid outside the purview of the federal crop insurance program. And we would oppose the creation of any disaster package that is funded by cuts to crop insurance. For crop insurance to function as designed, it must be affordable, widely available for purchase across the country, and economically viable for the private sector to deliver and sustain the long-term commitment of their capital, both dollars and talent, to this great industry. With the growth of the program has come challenges. AIP's expenses have grown significantly as the costs to market, service, and adjust claims have expanded. Education costs are increasing, and investments are constantly made to improve the tools and technologies that are needed to provide exceptional service to America's farmers. The effects of inflation have been felt throughout our industry. The administrative and operating payments provided by the USDA to help cover these delivery costs have not kept pace with either inflation or the rising price or complexity of delivering modern-day crop insurance. The inflation factor adjustment that was built into A&O calculations was unfortunately removed in 2015. These shortfalls come out of insurers' income, dragging down the real rate of return for the industry to levels that are just marginally better than the risk-free U.S. Treasuries. We want to see farmers and ranchers succeed, and as private businesses, we must also earn an adequate return to ensure that our investors keep this capital invested in the agricultural industry long-term. Crop insurance is the premier risk management tool for the American farmer. The public-private partnership that we enjoy delivers it in an efficient and effective way. These crop insurance benefits have kept families on their farms and Americans clothed, fueled, and fed. Thank you for inviting me to speak today and for your continued support of the crop insurance program. I look forward to answering any questions you have.
Thank you, Mrs. Houck. And Mr. Hopkins.
Thank you, Chairman. Chairman Boozman, Ranking Member Klobuchar, and the members of the committee, my name is Caleb Hopkins. I am the current chairman of the American Bankers Association's Agricultural and Rural Bankers Committee and testifying in that capacity today. I have worked in agricultural banking for 13 years, including the past 2 years as a loan production officer for Dakota Mac, a subsidiary of First Dakota National Bank in Yankton, South Dakota. Before First Dakota National Bank, I worked at a small community bank helping to lead their agricultural lending. Agricultural bankers have a deep appreciation for the important role producers play in our economy and the unique challenges they face. Like many ag bankers, my passion for agriculture goes beyond the bank. I have a herd of cattle, I'm a proud 4-H dad, and I have a crop insurance business with my wife. Our passion for the next generation of producers goes beyond a program or clinic. Fostering the next generation of producers is what we do every day. I appreciate the opportunity to present the views of the bankers at this hearing. Banks continue to be one of the first places that farmers and ranchers use when looking for agricultural loans, and over 80% of the banks in the United States have agriculture in their portfolio. Bankers finance all types of agriculture in every part of the country. Agricultural lending is a good business, and we work with our customers to improve their business, both in the short and long term. I'd like to start today by highlighting the current state of the agricultural economy. I was personally involved in congressional meetings to get economic assistance for farmers and ranchers. The economic assistance that was passed by Congress will provide some relief to our customers, but it still won't be enough for many. For example, soybean acres are expected to have a payment of $30 per acre, but estimates in my area show farmers being short $300 per acre on soybean ground. This is a trend across most commodities. USDA has projected an increase in farm income of 29% due to economic assistance, but input prices are still high due to inflation. At the same time, commodity prices are expected to drop this year. Every region will be affected differently, but it is becoming increasingly apparent that economic assistance will not be enough to cover the shortfalls this year or enhance the long-term health of balance sheets to weather another economically challenging year. This is why bankers are so supportive of a long-term farm bill. Our customers need the certainty that comes with a farm bill, and lenders must operate on knowns, not projections. A long-term farm bill provides certainty to agriculture, which allows for long-term planning. We look forward to working with the Senate Agricultural Committee to develop a new farm bill. ABA does have a list of priorities that bankers would like to see in the next farm bill that I've highlighted in my written testimony. This includes increasing FSA guaranteed and direct loan programs. We thank Senators Hoeven and Klobuchar for the PACE Act that creates a model for how this can be achieved. Additionally, changes to eligibility for beginning farmers and ranchers is vital to bringing in the next generation of farmers and ranchers. Bankers are supportive of modernizing reference prices and protecting and enhancing crop, livestock, and dairy insurance programs. Lastly, Farmer Mac is a tremendous partner to the banking industry, and we support efforts to modernize Farmer Mac to meet the modern needs of American agriculture. Beyond the Farm Bill, ABA is looking forward to the tax reform process that is playing out in Congress. Our customers rely on keeping the current estate tax exemptions and capital gain exemptions. The Access to Credit for Our Rural Economy Act, better known as the ACRE Act, is tax legislation that would create a level playing field for all lenders in agriculture. ABA analysis has shown that the ACRE Act would reduce the effective interest rate by up to 1% for qualified borrowers. We thank Senators Moran, King, Tuberville, Gallego, Marshall, and Kramer for sponsoring this vital piece of legislation. The ACRE Act will increase credit availability to rural America while driving down the cost for our borrowers. We believe this is the right solution to help rural America during these tough economic times and as well as in the long term. Farm banks are healthy and continue to be forward-looking, growing capital and increasing reserves. Bankers are proud of the work we do to support our nation's farmers and ranchers. The ag economy is a critical part of our economy, and America's banks remain committed to serve it through good times and bad. Thank you. I'd be happy to answer any questions you may have.
Thank you, Mr. Noble.
Good afternoon, Chairman Boozman, Ranking Member Klobuchar, and members of this committee. It's truly an honor to be before you today. As Senator Boozman shared earlier, many years ago I sat as a staffer in this very room to then Senator Blanche Lincoln of Arkansas. She eventually served as chairman of this committee, and it brings back a lot of memories seeing her portrait here on the wall today. Nearly 30 years later, our own John Boozman now holds that gavel, and I can't think of a better man to lead this committee. So forgive me for just taking a moment here, but this is truly a special moment for a boy from Arkansas. I'm Ben Noble, Executive Vice President and Chief Operating Officer of Riceland Foods, but I'm also the son of Buddy Noble and the brother of Andy Noble, who own and manage Noble Farms. As we discuss the state of the farm economy today, my story unfortunately mirrors what is happening across the countryside in rural America. Due to high input cost and lack of profitability over a multi-year period and the low probability for profitable returns this year, my family is pulling the ripcord. 2025 will be the first year since 1890, that's 135 years, that a Noble has not actively farmed in East Arkansas. We're selling our equipment at an auction this Friday. Our experience is unfortunately not unique. as lenders and farmers across the Mid-South face tough decisions with the prospect of low commodity prices, high input cost, and extreme uncertainty and volatility. This situation has profound and far-reaching effects across the economy and the livelihood of rural America. Riceland Foods is a farmer-owned cooperative that's been in business since 1921. We're the largest miller and marketer of rice in the United States, and we also serve as the largest marketer of soybeans in the Mid-South. Our membership consists of 5,500 members across America, and our farmer patrons are concentrated in Arkansas and Missouri. We directly employ over 1,700 people and indirectly support hundreds of jobs in rural America. For decades, our business model has been to provide marketing options for our members' rice and soybeans, process the grain, and then sell and distribute the finished goods through domestic and international channels. This activity generates well over $1 billion annually and is turned over multiple times in our region of the Mississippi Delta. The key in the aforementioned business model is the ability of the farmer to secure financing and produce a crop on an annual basis. Also key in this equation is a strong economy that allows farmers to remain profitable. Without our farmer members, all the economic activity that Riceland Foods generates and the jobs we support disappear, leaving economic deserts in many areas of East Arkansas and the Boot Heel of Missouri. Financial institutions work diligently and creatively to keep farmers on the farm this growing season, but a shadow of uncertainty remains across the entire system. Planting decisions and seed purchases are often made months before now. As final assessments are made, productive farmland will likely remain fallow this year due to some farmers' inability to attain financing. Ultimately, this could reduce the production of rice, soybeans, corn, and possibly other commodities in our growing region. Businesses like ours are struggling to plan accordingly to receive and process this year's crop. Our company has 4 milling locations across Arkansas and Missouri. We also have 24 drying locations across the same footprint. In small rural towns like Stuttgart, Hazen, Poplar Bluff, New Madrid, Wheatley, and many, many more, Riceland Foods is the largest employer and the main driver of the local economy. When our farmers suffer, we suffer. Ultimately, this impacts the entire region. It's not overstating to say that if Riceland Foods doesn't operate in many of these small towns, the towns no longer exist. We must take serious and substantial action that results in updated reference prices that secure a strong safety net for rice farmers. This means a substantial increase in the PLC reference price and the assurance that payment limitations are increased to reflect modern-day farming. These enhancements must be effective for the 2025 crop year. Securing a strong safety net for our growing members also provides stability for both farmer-owned cooperatives and private mills. Along those same lines, I'd be remiss if I didn't mention the importance of tax policy on our cooperative. Of particular significance to cooperatives such as Riceland, the Section 199A deduction stands out as one of our farmer members' most crucial tax policies. This provision enables cooperatives to pass tax deductions directly through to their members, who then reinvest the funds back into their operations. These reinvestments in turn strengthen local economies by creating jobs, increasing spending on ag production, and fostering growth in rural communities. I'll finish where I began in this full circle moment for me. I've witnessed firsthand the work Congress can do to support American agriculture as both a Senate staffer and a professional in this industry working on behalf of farmers. Now is the time for Congress to act on a new farm bill and support the industry I've devoted my life to before it's too late. Unfortunately, there are many farmers out there who won't be farming this year, and the outlook is even more grim. I implore you to act. Keep farmers farming. Every American is relying on this committee and your colleagues in Congress to deliver. Thank you for the opportunity, and I look forward to answering any questions.
Thank you, Mr. Noble, and thank you for sharing your story. Your family has been a powerful force for agriculture since 1890 and are so well respected. But I think it really highlights how difficult it is right now and the importance of the hearing today and the importance of getting your farm bill done. And I know your ancestor of 1890 is very, very proud of you right now. So now we would like to hear from Mr. Rowe.
Mr. Chairman, ranking members, and members of the committee, thank you for the opportunity to be here today. My name is Cedric Rowe. I'm a young first-generation farmer from Albany, Georgia. I own and operate a 30-acre farm where I grow organic hemp, peanuts, sunflowers, and watermelons. Today I'm going to talk to you. My bad. Today I'm going to talk to you on some highlights of my farming experience and talk about access to credit and risk management resources. I am concerned that without the new farm bill, the safety net will continue to be largely out of reach for us. This committee has the opportunity to promote effective policy to help new farmers enter and stay into the agriculture generation. I did not inherit land. I had to build it from the ground up. So without FSA, I was not able to purchase my first land. At the same time, I have also had some frustrations with FSA. For example, I was denied a microloan early on, even though my business plan was clearly sound. FSA is the go-to agency for farmers who cannot find credit from other means. Recently, they have been making some improvements. For example, recent critical updates from FSA loan program include prioritizing financial stability, offering more flexible terms, emphasizing savings and reserve payment scheduling, avoiding necessary impacts from balloon payments, and appropriate collateral requirements to reduce borrower risk without increasing the risk of the agency. We need to ensure appropriate staff levels are there too. It is important that someone is there to answer the phone at FSA and also other USDA offices. Looking to the Farm Bill, last year versions include proposals to improve beginning farmers' access to credit. The next Farm Bill should include provisions that would increase microloan limits to $100,000, match loan limits across programs, including direct farm ownership, down payment loan programs, remove 7-year limit on eligibility for operation loans, support distressed borrowers, pilot program for pre-approved for direct farm ownership loans, and also pilot loan programs to help startup costs. Credit is only part of the picture. Farming is a risk, and we all know. Sometimes, no matter how much you prepare, there's still uncertainty. The Risk Management Agency and FSA offer important risk management programs and financial relief to farmers and ranchers exposed to loss from events such as drought, hail, floods, and also diseases. These farm safety nets must be strengthened and support young farmers. Also, high-value organic crops are often undervalued by insurance coverage. For me and many other farmers, RMA does not offer insurance products that cover what we're growing on a small scale. Whole farm revenue protection is the only insurance program that is designated for small farmers and diverse farms. Only 10 whole farm policies were sold in Georgia last year. 83% of the farmers in Georgia do not have crop insurance. I encourage this committee to incentivize insurance agencies to sell crop insurance to small scale and especially crop farmers like me. I also encourage this committee to consider new insurance products specifically designated to deal with weather impact. For farmers who can't access RMA programs, the FSA offers non-insurance crop disaster programs. This is important program. This program needs to continue and the support by young farmers. By creating a revenue-based option with NAP, similar to the whole farm revenue protection, the agency could offer an on-ramp help farmers transition from NAP to whole farm revenue protections once they have acquired operational history. Getting more farmers enrolled in NAP early on is the goal, and keep supporting them with the basic safety net. And it also gets them in the door with USDA when it comes to loan access. What I really want to emphasize today is that as a young farmer, we need to be heard. We need to know that our experience is being considered when it comes to the farm bill being put together. We need certainty. We need certainty that Congress will fulfill the responsibility and deliver an effective farm bill for all farmers. We also need certainty that USDA will continue to support farmers moving forward from surviving to thriving farms. It should not be so difficult for young and beginning farmers as myself to secure support we need to innovate and achieve long-term success. Thank you again for the opportunity to testify for this committee. I look forward to answering any questions you may have.
Thank you, Mr. Rowe, very much. We're going to go, I'm going to get into line later on. So we're going to go right to you, Mitch. I know you've got lots of stuff going on. You're an important guy. And as I was explaining to him earlier, there's just a whole lot of stuff going on. So you're welcome to go ahead and question the witnesses.
Tara Durbin from my hometown of Louisville, Kentucky, from Farm Credit, and the other witnesses for being here. I've been on this committee my entire time in the Senate. It's important to Kentucky. We have 70,000 farms, most of them small. Small farms in particular make up the backbone of agriculture in my state and many others. As my colleagues on the committee know well, farmers face a whole lot of uncertainty in today's economy, unstable markets, volatile prices, record drops in farm income have made this job, which is already difficult, even harder. Kentucky farmers and farmers across the country are grappling with a steady decline in farmland itself. It's more important than ever that we ensure our farmland remains farmland while providing opportunity for new farmers to get involved in the agricultural economy. So I was pleased to work with the Kentucky Farm Bureau on legislation that would offer retiring farmers a viable path to transition their farmland to the next generation of farmers. Protecting America Farmers Act would reduce the tax burden on selling farmland and encourage landholders to keep their farmland in the hands of active young farmers. So Tara, what financial tools would help address the problem of land and capital access that American farmers face?
Thank you, Senator, for your question. As you mentioned, that is a very complex issue. And as you mentioned, a lot of communities in Kentucky specifically are kind of wrestling with trying to solve for that. And so that is something that at Farm Credit Mid-America we have witnessed across our service territory. And I personally want to share, I've witnessed that myself and my husband. About 20 miles from our home farm, a microchip plant has come in, and so that has driven up the cost of land. So your question and that complex issue hits very close to home to me as well. And, I think really looking, I would challenge you to consider looking for ways that we can incentivize farmland to stay in agriculture production. And so you mentioned our young beginning farmers. That incentive would really help our young beginning farmers as far as getting into agriculture. The barriers to entry into agriculture, as Cedric mentioned, are huge when we think about land. And so looking for ways to incentivize keeping agriculture in production is definitely a way that we could work together to solve that complex issue.
So I guess I assume Congress must have some role in all of this. Does it require changing the law to try to get the outcome that we prefer?
That would be a question that I guess we would have to work on. As I said, that's a complex issue, and that would take a lot of work from you all pulling together and working with industry partners as well. As you said, you had worked with Kentucky Farm Bureau and some others to help resolve that issue.
Okay, thank you. Thank you, Ms. Chairman.
Thank you.
Thank you, Senator McConnell. Senator Hoven. Okay.
And thanks to Senator Hoven for allowing me to hop ahead. Thank you, Chairman Boozman. And to our panel of witnesses for being here today. Really do appreciate it. And would like to start with crop insurance. And so Mrs. Hoke and Mr. Hopkins, crop insurance is the most effective and reliable risk management tool available to farmers that must remain affordable and accessible. Over the years, Congress has approved multiple rounds of ad hoc disaster payments to help farmers recover from severe weather events. We see these frequently in Iowa, and most recently last December. And I'm thankful Secretary Rollins is moving quickly to disperse to these hurting farmers. While these payments offer relief in times of crisis, they are slow, they're unpredictable, and subject to political gridlock, leaving farmers uncertain about when or if help will actually arrive. Iowa farmers who have faced multiple natural disasters in recent years have made it clear that they need certainty and protection in real time, not months or years after the damage is done. So, Mrs. Hoke, can you explain why federal crop insurance is superior to the ad hoc disaster payments? And second, do you see any improvements that Congress needs to make in the next Farm Bill?
Thank you very much for the question. I made some comments on that in my opening remarks, and the disaster payments that have been made in recent years have been significant, and there is true opportunity to look at crop insurance. A number of those have been already developed, right? Could be the products, the indexed products that were made available in the southern part of the state. There are area-based plans that can additionally help a farmer to have additional cover beyond their immediate cover. These are important steps that we can take. We can work together through 508H products, which allow that opportunity for new products to be brought forward and developed, that we can work creatively together to ensure that we bring what was ad hoc, and as my dad always told me, hope is not a plan. And yes. Ad hoc disaster can be hope-based, and that's why that uncertainty, that certainty that your farmers say in Iowa, it's the same in Minnesota, that certainty is so critical. It's also critical to my banking colleagues as well. So the ability to work creatively together to find ways to move those disaster payments into crop insurance where there is a risk sharing. The farmer takes the risk, the government takes risks, and as insurance providers, we also take risk. And that together creates a very effective and efficient process with competition to bring the best results to our farmers.
Very good. Hope is not a plan. Okay, Mr. Hopkins, can you expand on this a little bit and help us understand why crop insurance is a necessary tool for farmers to have when you are making loans to those farmers?
Thank you, Senator. I appreciate the opportunity to discuss this. Yes. Crop insurance is the #1 risk management tool in the belt for ag lenders. It is a tool that also puts the power back in the producer's hands. They have the opportunity to look at different coverage levels and make those decisions about their operation. Not only on the risk management side, it also creates marketing opportunities for producers when it comes to marketing those crops proactively throughout the year. So that level of certainty helps bankers make that decision as we look at renewing operating lines. Reference prices combined with crop insurance are the two most important tools that bankers have.
Wonderful. And thank you, Mr. Chair. I'm going to yield back.
Senator Smith.
Mr. Chair, since I just got here, I'll defer to Senator Tuberville if he hasn't asked questions, then I'll be ready to go. Thank you.
No, that's fine. Senator Tuberville.
Well, thank you very much. Welcome. Glad you're here. Unfortunately, we've heard some very bad news. Mr. Noble, I've got friends in Arkansas, you know, that I'm hearing from them quite often. Our ag economy is a disaster right now, and we've obviously failed in some degree. I don't know where it's failed, but it is obviously in a tailspin, and we need to help. Mr. Noble, what can we do to help? I mean, you're seeing all this going on firsthand. What can we do to help?
Yeah, the main thing, Senator, is quick action on a farm bill. I mean, obviously that's easy to say and hard to accomplish, but I think everybody up here has said something along the similar lines that long-term policy matters, and it matters to ag lenders, it matters to the farmers that are the recipients of the loans, but there's got to be some certainty. And at the risk of spinning off into another aspect, we face intense international competition with the commodities that our company trades in. We've always been fair. We've always been free traders, but quite frankly, trade's got to be fair, and it hasn't been. There's a lot of challenges and complexities to that. So if we're going to ask our domestic producers to compete in a worldwide market, there's got to be stability there, and there's got to be certainty. So the quicker y'all can provide that, the better.
Yeah, thank you. I'm hoping President Trump's right on the situation right now with tariffs. Obviously, it's our last chance to do something to help this country, especially our farmers and producers. Mr. Durbin, I've been talking about the need to raise FSA guaranteed loan limits for some time. I was pleased Chairman Boozman included this in his framework. Can you discuss the importance of raising guaranteed ownership loans to $3.5 million?
Yes, so thank you, Senator, for that question. At Farm Credit, we utilize the FSA Guaranteed Loan Program as an important tool for serving our customers, and specifically our young, beginning, and small customers. That tool is extremely important. So that would allow us to loan to more customers, to more farmers, and help them get their operations up and going, but also as a risk mitigating tool for us to better serve agriculture.
Thank you. Mr. Hopkins, we're trying to save not just the farmers that have been doing it for a long time like Mr. Noble, but we're trying to get young farmers involved in this fiasco as we're looking at. And why in the world you'd do it, I don't know, but hopefully there's a lot of people out there that want to get into farming. I know at Auburn, we have an ag department that's very strong, and you see a lot of great activity. How do we do that? How we get young people involved? We lost 150,000 farmers and farms in the last 4 years, a disaster that nobody's talking about.
Definitely. Thank you for the question, Senator. We start with the Farm Bill with the increasing lending limits. And as much negativity as we see surrounding ag, I am very optimistic when I look at young producers we have around our area that are very on top of management. They're very on top of technology. They're looking for opportunity. The question is, how do we give them the opportunity? What tools do we have to provide them with opportunity as capital expenses are getting to be so high that the barrier to entry into agriculture, like you said yourself, why would you want to do it? But there's still individuals with that passion to be producers for this country. Yeah. And raising those lending limits in order to keep pace with that increased capital requirement allows us to provide that capital to those producers.
$1.5 million for a cotton picker. Man, we've lost it, Mr. Rowe, Tuskegee, Alabama. Glad to see somebody from my home state and close to my hometown. And I know you're an Auburn fan, right?
Yes, sir.
Yeah, good. Good answer. Good answer. Hey, being a peanut farmer, tell us how peanuts have weathered this storm, because peanut prices have been pretty good over the last few years. What do you see for the future of peanuts?
Thank you for the question, Senator. My opinion when it comes to the peanut industry is growing strong. Peanuts is a legume that grows on the ground, so a lot of weather impact doesn't affect the peanut itself during the growth season. What I can say is that it's challenging with tariffs being raised, prices go up for growers, and access to land is very critical to stay surviving with rising tariffs. In order for farmers to survive, they have to plant more acreage, and that can be a challenge itself.
Thank you. Thank you. Thank you, Mr. Chairman.
Thank you. Mr. Noble, I truly believe there's no greater tool for rural development in many agriculture communities than strong risk management tools. Riceland is an anchor of the community in eastern Arkansas. Can you illustrate for the committee the impact a strong farm safety net has on rural communities?
Sure, Senator. When you think about the support we're talking about with the safety net for farmers, it sometimes gets lost. That's just a transaction with the government and the farmer, and I guess in one sense it is. But when you think about how many times that dollar turns over economically in a rural community, whether it's the grocery store, rural health facilities, machinery repair, machinery repairs, countless of other small businesses, rural America ultimately depends on the farmer as the backbone and really the heart of their entire community. I think I shared earlier, for businesses such as ours, when you go to many of these small towns, we're the largest employer, if I don't want to say the only, but we're a significant player in some of these really small towns. And if they're without a significant safety net, I kind of shudder to think what's going to happen to some of those areas.
Ms. Hoke, you want to add to that?
Yeah, I mean, I think the importance of crop insurance comes into play here as well. The ability of the committee to continue to deepen coverage levels and the premium support for our farmers through the work that you've done in such areas as area plans. And I'll give you a personal example. When you're facing extremely high input costs, the importance of being able to secure that loan, of being able to have a sense of certainty around the growth of your crop can actually be covered in the event of a loss. Today, that coverage for soybeans wouldn't be adequate in just even the highest level, which is what my family takes of the MPCI coverage. So the ability to layer on, for instance, the ECO plan that's out there so that it provides an additional cover from an area perspective, it allows you to increase that coverage level in event that there's a loss. However, I would make two really critical points around this. The first one is that it's really important with these area plans that a farmer is well educated by their agent and their provider, that it doesn't supplant their individual coverage for their farm. They still need to maintain that individual coverage and then could layer on additional area coverage to give them more cover in the event of a loss. It's also important that these products, as they continue to be developed, I think they're an important tool for our farmers of all sizes. As they're developed, it's very important that they remain actuarially sound.
Very good. Mr. Hopkins, last summer, lenders like yourself started sounding the alarm bells that getting financing might be difficult heading into 2025. Can you give us very quickly something in regard to where we're at with credit availability in light of the current farm balance sheet?
Thank you for the question, Senator. Yes, sitting on American Bankers Ag Committee, I get the opportunity to speak with bankers across the country. It started in your area in Arkansas and Southeast and is kind of starting to move its way up through the Midwest and across the country. And what we're seeing is continued significant earned net worth losses across the board. Talking to lenders down in that area, and as well as what I'm seeing in the Midwest is certain parts of the Southeast part of the country are on year 2, 3, if not 4 of losses. And bankers are starting to have to work out plans. Have uncomfortable conversations on what is the end game here. When I look at the Midwest coming through renewal season, we were able to get all of our renewals completed this year, but those conversations are, what is the burn rate of working capital? And it's creeping up on us much faster. And when I was here last summer, I was hearing that from across the country, and it's hitting home right now.
Okay, very good. Senator Smith.
Thank you, Mr. Chair, and welcome to our panelists. I want to say a particular hello to Ms. Hoke, my fellow Minnesotan. It's great to have you on the panel today.
Thank you very much.
So I want to start out by touching on something that Senator Tuberville was touching on, which is the challenges facing folks that are just getting into farming. And we know that the average age of farmers is creeping up, just like my age is creeping up. And as we see this big generational transition in agriculture, we know that it's harder and harder for beginning farmers to put the tools together to be able to get going, whether it's access to capital or to land or to farm safety net programs, right, and markets. And without support, what I'm very concerned about is that we won't see the transfer of land from one generation to the next to new producers who maybe don't come from the farm themselves or don't have access to land through their families, and what happens. In Minnesota, what happens in that situation? In Minnesota, we have developed a beginning farmer tax credit that has been a really successful tool for young farmers as they try to get their businesses going. And I know that other states like Iowa and Kentucky and Nebraska have also developed similar beginning farmer tax credit programs. And what this does is it provides a tax credit to incentivize the sale or rent of farmland to beginning farmers. And I'm working on making this a national program. So I'm just going to address this question to the whole panel as a start. What do you see as the biggest hurdles facing folks as they're wanting to get into farming, and what do you think we ought to be most focused on in Congress as we think about this big farm bill that hopefully will get moving?
Thank you for the question, Senator. One of the things that you have mentioned was the barrier to entry for our young farmers, and that is true. So land access continues to be a challenge for our young farmers. You also were inquiring about what lenders are doing to encourage young farmers to engage into agriculture production. And so the farm credit system, all farm credit associations have a young beginning small farmer program. Yep. And so our Young Beginning Small Farmer program at Farm Credit Mid-America is called Growing Forward. And within that program, we have different underwriting standards for the young beginning and small farmers. So, for example, somebody that's starting out and getting into the ag industry is not expected to chin the bar maybe in their early 20s at maybe where their parents or grandparents would when we think about loan underwriting standards. And so we have different loan underwriting standards. Specifically for those customers, they will get our Tier 1 best interest rate. That is important to them. Mm-hmm. Now that comes with a little caveat, and that caveat is they go through educational programming, and we provide that educational programming to them. We require that they put a business plan together to ensure that that operation.
So there's some technical assistance and other kind of support that goes along with that. Yeah, absolutely. And Mr. Rowe, I'm sorry I want to make sure I have a chance to talk with Mr. Rowe about this. We know from surveys from the National Young Farmers Coalition and the National Farm Bureau that getting access to land, high quality land, is one of the biggest barriers. And we know also that the average farm real estate value has increased, pretty dramatically. So can you talk a bit about how you see this and what are the impacts of rising land prices on your business and others that are wanting to get into farming?
Thank you for your question, Senator. As you know, like I say, land access is always a challenge for young farmers or farmers in general. Me personally, to speak on that, I would say, the challenge also is that young farmers come from an educational background. So they're going to school for research and be innovative on the farm. Mm-hmm. That carries over when it's time to go get a loan. So that's a challenge right there, a barrier by young farmers pursuing their education to better, come up with different ways to grow a crop or grow it in a particular different environment. Mm-hmm. So challenge would be, just having more access to opportunities for young farmers to be able to start up the farm, not based on the history of the education. And also, I want to thank you for your leadership on this issue. And I encourage this committee to support establishing a pilot program to invest in local-led projects to tackle challenges in accessing land, credit, and markets.
Thank you. Thank you very much.
All right, Senator Booker.
Thank you, and thank you for your generosity as well to the ranking member for allowing me to get my questions in. At the last full hearing, we talked about the crisis, really the threat from the illegal freeze of funding that is imposed by the USDA on thousands of signed contracts with our American farmers. 2 weeks have gone by, and I'm getting continued frantic calls and emails from farmers, not just in New Jersey, but across the country, who've invested money into their farms according to the terms of signed contracts with the USDA, but who are still not receiving their reimbursement payments from the USDA. Planting season is now here, and many of these farmers simply don't have the resources to get their crops in the ground in the absence of the funding that's owed to them, again, by the USDA. And it's not just the signed contracts with the farmers, but it's also the continuing freeze of reimbursements to nonprofits and small businesses that provide assistance to those farmers. These nonprofits and small businesses in New Jersey and around the country are now being forced to lay off staff and stop helping farmers that are in need. To make matters worse, the USDA now plans to close local offices around the country that farmers rely on. I have a letter drafted, dated March 10th from the National Young Farmers Coalition focused on the USDA funding freeze that I would request consent to have placed into the record.
Will be on the record.
I won't read the whole letter, obviously, but I think it's really important that we highlight the main message. They write, the abrupt freeze of the USDA grant funding has left young farmers nationwide in financial distress. Congress must act swiftly to unfreeze these funds and ensure that young farmers can access land, capital, and markets. To address this, I plan to file an amendment to the continuing resolution this week to lift the USDA freeze on signed contracts and to require USDA to make all past due payments, and I'm hoping others on the committee will join me. I have a question, Mr. Rowe. Could you just for a moment talk about the impact you are seeing from the USDA funding freeze on the young farmers you know and work with?
Thank you for your question, Senator. The impact that's being found, that's going on in my area, not only me but young farmers, is with the freezing. Uncertainty is bad for farmers. It's bad for business. Not only that, but when we don't have anyone to talk to when you go to these local FSA office or USDA offices. So having someone in the office or boots on the ground is affecting us when it comes to, managing different practices that we're doing on our farm. Also, contracts with other USDA agencies are on pause, and that means a lot of farmers will have to cancel what their plans for that year, or if they was growing a particular crop based on that contract, they have to, it's a pause. So with the funding freeze, a lot of opportunities that farmers have, like myself, to go out and get grant money to be able to make my operation more thriving is not there anymore.
And so on farmers who are often struggling financially to make it all work, what does this mean to the financial well-being and stability of a lot of the farmers you know?
They either have to not farm this year or cut back. But like I say, it's a challenge itself when you don't have the support of the federal government.
Mr. Rowe, in your testimony, you mentioned that 83% of farmers in Georgia do not have crop insurance. 83% uncovered. This is really a striking failure of our safety net. And as you mentioned, many of these farmers have never had the option to purchase crop insurance because it's difficult to find agents that are willing to work with small farmers. I'm seeing similar things in my state. Can you speak to the importance of Congress making changes to the upcoming Farm Bill to ensure that crop insurance agents are incentivized to sell crop insurance to small farms like yours?
Thank you for your question, Senator. I just encourage the committee to, like I say, incentivize crop insurance agencies to sell crop insurance to small-scale farmers like myself and also specialty crops. Because right now, it's a waste of their time dealing with a small farmer like myself. So large crop insurance don't particularly focus on young farmers because they don't have any type of risk management there themselves.
That's really enlightening. Thank you very much. In the 10 seconds I have left, and I remind you, this is for the permanent Senate record, I and you both played college ball. My press guide listed me as 6'8", 270. Was your press guide equally as inaccurate in listing your height and weight?
Yes, sir, he was.
Okay. Thank you very much.
Okay. Very good. I'm not going to ask anyone else their weight. I just want to be clear. Okay, thank you, Senator Booker. I apologize. We had a long leadership meeting, as you can imagine. Both Senator Booker and I were there. That there's just a few things going on right now that it's in everyone's interest that we resolve. So I want to thank. I know you were introduced, Ms. Hoke from Minnesota, from Anoka, Minnesota. Thank you, and I'm sure you survived without me introducing you. I heard you did a good job, so thank you for that. Thank you. We all know that our farmers are in a challenging environment right now. That obviously includes tariffs. something that's whiplashing farmers back and forth. Then they're on, then it's paused, then they're doubled, as happened today. That isn't certainty, it's chaos, and our farmers are among those that are hit the hardest. So on top of that is input costs, and I'm very concerned about what's happening right now. It's already a difficult time. And one of the ways we can give you that certainty is by making sure you have access to affordable and reliable credit. And that can mean the difference, I know you all know better than me, between economic viability and foreclosure. Farmers rely on USDA, commercial banks, our farm credit system. Senator Hoeven and I have worked together to expand credit opportunities and improve our farm loan programs. I've heard many of the members mention this. This is the bill that Senator Hoeven and I have. And I'm very much looking forward to working with the chairman as we work on a farm bill to increasing those loan limits and improving access to credit. The bill also includes new authority to allow farmers who fall into distress to refinance USDA guaranteed loans into direct loans. In addition to credit access, our farmers need strong and reliable crop insurance. And we all know that since 2018, the Farm Bill, more farmers have been able to purchase crop insurance, but there are still gaps in risk management options and access for farmers. Many small, diversified producers face challenges with buying crop insurance policies, particularly cost. That's why Majority Leader Thune, who remained on this committee, I don't know where his staff is. We're very happy about that. I've worked on legislation to make insurance policies a little more affordable for beginning farmers and ranchers. So I want to start with you, Ms. Hoke, and just ask you, the crop insurance groups you are representing here today have endorsed the Crop Insurance for Future Farmers Act, the bill I just mentioned that Senator Thune and I have, and are going to reintroduce. Can you talk about those unique challenges for beginning farmers and why this legislation will help you better manage risk?
Thank you, Senator, and great to be from our same great state of Minnesota. Thank you for the question. It is challenging. I mean, we've heard the discussion already for a new farmer. And actually, a young farmer, also a beginning farmer, right? You don't only have to start farming young. So there is, as you come in, there are, and I know personally, significant investments that you need to make. Land, we discussed, but also equipment, right? The cost of equipment has become significant. The inputs, you need to buy your seed, your fertilizer, all before you even know what the prices are gonna be that you'll receive at the point that you harvest, and if you'll have a harvest. And crop insurance, especially for that beginning farmer, gives them that certainty. That certainty is what we've all said is so critical and important, and providing the premium support to those beginning farmers, I endorse that. I'm happy and supportive of that because it also brings about education that brings them into the program right away.
Thank you. Well, Senator Hoeven has walked in, and he and I, as I just mentioned before I even got here, have partnered for years on legislation to improve access to credit by modernizing loan limits for USDA loan programs. New and beginning farmers are often deemed too risky of an investment for commercial lenders, and high land values and increased costs in recent years can be prohibitive for new farmers. I guess I'd ask you, Mrs. Durbin and Mr. Hopkins, can you speak to the importance of updating these farm loan limitations in the next farm bill? From your perspective as a lender, are there other improvements we should consider making?
Thank you, Senator. I'd be happy to address that question. Like you mentioned, the increase in capital expenses, along with just your normal operating costs, have grown substantially over the last 5 years. And when you look at what land costs have done, the guarantee limits have not kept pace in that time period. That would allow us as lenders to have more tools in our belt to get creative with producers as we work through these adverse times. Those increased lending limits, I've talked to some of my lenders from across the country, 2 years ago had already hit the limits as they were trying to figure out how to work through some of these losses with customers. So increasing those limits would, again, give us flexibility to work with these producers to keep them going.
Okay, very good. And Ms. Durbin?
Yes, thank you, Senator. I agree with what Mr. Hopkins shared. I would also add that given the the rising cost of inflation, that it is very important as we think about this next farm bill to properly index that so that we don't have to continue to keep coming back and asking for increases in farm bills to come.
Okay. Mr. Rowe, the one last question here. Do the current USDA loan programs meet the needs of younger farmers who rely on FSA lending programs? What suggestions do you have to improve access?
Thank you for the question, Senator. Yes, the programs are currently there, do support farmers and also young farmers, but some of the loans do not, some of the loan programs are still a barrier for young farmers to get into, like for myself. So I would say, just to piggyback on that, just to focus on more so understanding that young farmers come from a different perspective of farming, more innovative, more hands-on, and it doesn't take a lot of land for a farmer to be diversified and successful.
Okay, very good. Well, the chairman has returned, so I will give him back the gavel. I never actually took it, but here it is. I think that Senator Hoeven is next, so thank you.
She'll probably hit me with a gavel.
Thanks, Mr. Chairman. And I just want to follow up on a question Senator Klobuchar brought up. As she said, we put in legislation that would raise the limits on both the direct operating and the guaranteed ownership loans, as well as the guarantee programs. And we've done that before, and that's been part of the Farm Bill as we've reauthorized the Farm Bill, and we certainly hope to do that again this time. I would guess, or I would ask probably both Ms. Durbin and also Hopkins, Caleb Hopkins. You know, I'm going to give you the changes we made and just let you react to them and see if you have any thoughts in regard to it. The direct operating we increased from $400,000 to $750,000. The guaranteed operating we increased from $2.25 million to $2.6 million. The direct ownership we increased from $600,000 to $850,000, and then the guaranteed ownership from $2.25 million to $3 million. And then we also increased the loan limits on the FSA microloan program from $50,000 to $100,000. So my question would be, I would like you to react to that, starting with Ms. Durbin, and then also particularly in regards to some of our beginning farmers as well. Big challenge getting younger folks into farming and ranching.
Yeah, so thank you, Senator. And thank you for continuing to raise this important issue. So as we've been sharing today, you know, the input costs continue to rise, and it's important for us to be able to work more closely with our customers and help more farmers by using those increased loan limits that really align with more modernized agriculture. And so we appreciate your efforts in working towards that. Specifically regarding our young beginning farmers, we work with our young beginning and small farmers to have different underwriting standards, that they have a different kind of bar to chin. It's not as high as what we would expect someone who has been farming for 40 or 50 years to have to chin when we think about experiencing and building your financial position. So that is one way that we work with our young beginning small farmers. We also put them through different educational opportunities over their journey of their customer with us. And so allowing them the opportunity to understand their financials, understand different decisions that they make and how that impacts their operation, not only today, but in years to come, is something that we work very closely with our young beginning and small farm customers at Farm Credit Mid-America, and that's through our Growing Forward program.
Well, I'm going to add to that also then Senator Welsh and Senator Tina Smith as well, who's a member of this committee, have introduced the Farm Ownership Improvement Act, where would allow FSA to provide a pre-qualification so that the borrower would actually, you know, if they're going to acquire farmland or equipment, whatever it is, they can actually get pre-qualified so they don't miss out, for example, if they would go to an auction or to some type of, estate sale or something like that. Bring that into the discussion too. I guess I'm just looking for any ways that we can enhance the program, both for established, but particularly for new farmers, beginning farmers.
Yes, so I think that opportunities like what you're suggesting are important to our young beginning farmers. And the more ways that we can look for ways to help encourage and incentivize them to get into agriculture is important. Specifically for farm credit as we think about our mission to serve customers, not only in good, but also in challenging times. And so those are great opportunities that I think we need to further consider.
Mr. Hopkins or Mr. Rowe, any thoughts on enhancements?
Thank you for the question, Senator. I'd like to elaborate on the last part a little bit more. The enhancement on pre-qualification will not only increase efficiency within the FSA loan programs, but it would allow us to get capital to those beginning farmers much quicker. Proactive education is our best tool to help young and beginning farmers as we look to the future. And pre-qualification allows them to start those conversations much earlier. And I hear time and time again from young producers that once an opportunity comes, in most instances in Iowa, you have 4 to 6 weeks. You're seeing most of these farms go through auction sale, not private sale like we used to. And that is not enough time to get through the process. The pre-qualification enhancement would greatly, again, improve that for young and beginning farmers to make sure that they are able to be proactive on that decision.
Yeah, good to hear. And then Mr. Rowe, any thoughts on that?
Thank you for the question, Mr. Senator. I support this legislation, and thank you for taking the lead on that.
Okay. Again, thanks to all of you. Appreciate you being here very much. Thank you, Mr. Chair.
Senator Warnick.
Thank you, Chair Boozman. Before I get started on my questions, I just want to recognize that among this incredible panel of folks testifying, I'm glad that we got a Georgian on the panel. Mr. Cedric Rowe is a first-generation farmer from Albany, Georgia, and a graduate of Fort Valley State University, one of our 1890 universities, land-grant institutions, and an HBCU. Thank you so very much, Mr. Rowe, for being here. Underserved farmers, including historically marginalized farmers, those with limited resources, and folks who served in the armed forces, face many structural barriers in starting and running their farms. But one of those barriers, of course, is access to credit. USDA's Farm Service Agency, or FSA, is frequently called a lender of last resort because it provides credit to folks like underserved farmers who are not eligible for traditional loans. Mr. Rowe, did you inherit your land?
No, sir.
So what role did FSA play in helping you start your farm operation?
FSA played a viable role when it came to purchasing my farm. They helped me when it came to understanding the value of land, understanding how production can be, operated on that land. So FSA, without them, it was kind of hard for me to purchase my first land.
So it was critical for you being able to get started.
Yes, sir.
Many underserved farmers do not inherit their land, as is the case with you, and cannot afford to buy it, which is why these loan programs are so critical. Historically, USDA has not equitably administered these programs. In fact, many black farmers in Georgia and across the country have historically experienced blatant discrimination at the hands of FSA, and that's why I was so glad to fight to secure financial assistance for farmers who had experienced discrimination at the hands of FSA in the Inflation Reduction Act. And I'm glad that the Biden administration was able to get that money out to those farmers. But in addition to acknowledging past wrongs, we need to make sure that these lending programs work for today's and tomorrow's underserved farmers. Mr. Rowe, what changes to FSA's lending programs would you recommend so that these programs work better for underserved farmers?
Thank you for your question, Senator. As stated in my testimony, I think it's important that USDA carry on what they started by prioritizing financial stability for farmers offering more flexibility terms, emphasizing saving and reserve payment schedules, avoid unnecessary impacts to balloon payments, and also appropriate collateral requirements. That's a big issue when it comes to getting a loan collateral.
And of course, you've seen this up close. You know, this is your own story and what it has meant for you. It was helpful for you, but this is an important issue for all of us. The average age of the American farmer is reaching 60 years old. So it's in our enlightened self-interest to make sure that we provide a path for all of our motivated young people who have the grit, the work ethic, the skills to farm, but need a path. That's the case in a number of sectors. Aviation sector is another. That's for another committee. But it's such an important issue. Farmers today are experiencing an overall lack of certainty. They are dealing with high input costs like fuel and fertilizer, as well as changing weather patterns and a longer and stronger hurricane season brought on by climate change. USDA programs aimed at helping farmers manage risk, like commodity support programs, crop insurance, and disaster assistance programs, have not been updated to reflect everything that has changed since the last Farm Bill was enacted in 2018. Mr. Hopkins, will uncertainty in the farm economy help or hurt your ability to provide credit?
Uncertainty always provides added risk. Crop insurance is the number one tool that ag lenders have to help mitigate that risk. The second one is the increased reference prices that are needed in updated Farm Bill. Ag lenders that I've all talked to, we look at those two as a 1-2 punch.
Right.
You have,
and the folks you're trying to help right now, they're planning for the upcoming season. In the last 2 months, President Trump has threatened and rolled back tariffs on our largest trading partners, which farmers rely on for inputs critical to making fertilizer as well as export markets they have worked hard to open. Mr. Rowe, which farmers do you think are hurt worse by uncertainty from tariffs, the giant farming operations or small and underserved farmers?
Thank you for the question. All farmers are affected by tariffs, but small and beginning farmers are still out of the picture when it comes to that.
Yeah. Thank you, both of you, for your testimony.
Senator Marshall.
Thank you, Chairman, and welcome to all of our guest panelists as well. My first question will be for Ms. Durbin. Ms. Durbin, you probably know this, but we lose more farmers to suicide than we do from farming accidents. We're losing 1, 2, 3 farmers a day now to suicide. It's said that the rate of suicide in farmers is multiple compared to other professions. And I think the reasons, to me, are somewhat obvious. The stress is real out there. It's very real in farmland. And I bet the suicide rate in farmers is proportionate to their debt and their net income as well. And the added stress for a farmer is that this isn't just a business I started. I'm a 5th generation farm kid. My children would be the 6th, and now I have grandchildren would be the 7th. All over Kansas, 6th, 7th generation farmers and ranchers are feeling that challenge. So the stress is real. Farmer suicide is very real as well. It's not often talked about, but Farm Credit is actually out there leading, trying to educate farmers how to recognize it, how to be a good neighbor. I just want to compliment you. Maybe you could share a little bit about your program. There's no one that knows that a good farm loan agent, community bank, Farm Credit knows their customer, and they know when that stress is real. So maybe you can talk a little bit about what you're doing to try to address that farmer suicide rate.
So thank you, Senator, for raising that question to me today. And, what you shared is real. And I think we all could agree that if we look back over history, farmers are no stranger to, challenge. And our farmers are resilient. And, I know some of this firsthand. I'm a farmer myself. My husband and I have our own farming operation, and I understand the stress that comes with that. Farmers have the most faith of anyone I know.
They do.
And so when you think about that, there's so much out of their control. You know, they can't control the weather, they can't control prices. And so there is a lot of stress that comes with that. And so when you think about the current economic environment in agriculture, that stress is compounded, right? And so one of the things that I continue to be extremely proud of, not only as a farmer, but working for the farm credit system, specifically Farm Credit Mid-America, and the ways that we are partnering with our industry partners to help our customers experiencing that stress. And so one of the things that we have done as a system is partner with the American Farm Bureau, the National Farmers Union, on the Resilience Program, Resilience Relief, which is a program, a free program for online help and coaching to farmers, farm families that are experiencing that stress, and helping them work through that stress and how to do that in a way that helps them thrive coming out on the other side. And so for me, working for an organization and the farm credit system that truly keeps the customer at heart. You know, our 109-year-old mission is to serve all of agriculture and to be there for customers in good and challenging times, providing reliable credit to our farmers. And that is something that I'm extremely proud of, and I appreciate that you raised that question today.
Yeah, and just in case anybody's out there watching, listening, I think the number is 988. Lacey, is it 988? The 988 number you can call if you're having suicidal thoughts. Maybe it's your neighbor, though, that's having, you recognize something about your neighbor, that they're not sleeping well, that they're not going to the high school basketball games this time of the year, they're not going to church, that you might recognize something. Be a good neighbor and say, hey, let's go get a cup of coffee. Or if it's really bad, let's call 988. Let's go to Ms. Hoke next. You deal with crop insurance every day, right?
Yes.
Okay. I want to make sure I understand, why is crop insurance increasing so much? I mean, I assume it is. Is it input cost? Is it Mother Nature? Why are crop insurance rates going up?
Yeah, I mean, I think crop insurance creates certainty. And if I can comment on your previous question, we are passionate at RCIS around the mental health and wellness of our farmers. It's a topic we've been trying to raise more to the forefront, so I love that you raised that. As crop insurance, our adjusters are out there on the front line. In the moment when that loss occurs, and having been there myself, it's extreme stress for a farmer. You're thinking about the loan you have to pay off, you're thinking about your family, you're thinking about education for your kids, and you're facing a loss and not quite sure what's going to happen. Those crop insurance agents, we have created training for them to be first responders, to have a sense of an awareness when they're interacting even with a farmer out in the field in that loss adjusting moment. So there are so many moments that we can all take to be good neighbors, to be careful and thoughtful about the mental health and wellness of those around us. I wanted to add that. I think it's so important to share.
And if I could share one thing back with you, and I talked to this with Farm Credit, you need to make sure that your own employees get some TLC after those events as well, because it is traumatic to them as well. No one likes to go in and have a metal shed cell. No one likes to go in there in these traumatic events and work the adjustment. It's tough on your employees too.
Very much agreed. Crop insurance, back to your first question, crop insurance is a really important tool. The availability of that to all farmers across the country is critical to this program, ensuring that it's affordable, that it's widely available, that it serves our farmers across all crops, and that important to the program itself, that it's actuarially sound, that we have the right data, we have the right understanding of those products to make sure that they're available to serve our farmers in America when they need it the most.
So when I ask people, why is flood insurance going up so much, and the answers would be, well, it costs a lot more to replace a home, and there's more storms, there's more floods. In crop insurance, is it also a reflection, though, just rising input costs and interest rates as well, or why? I assume there's some reasons.
Yeah, the cost of crop insurance will be driven by two predominant things. The yields that come out, and those yields can be impacted by weather. They could be impacted by a farmer's particular choice around seed or inputs that they put into their crop, and it will be absolutely impacted by the commodity price.
Thank you so much, Chairman. Sorry to go over. I yield back.
No, thank you. That was really an important line thought and questioning. Senator Moran.
And thank you. The chairman's mark of his Farm Bill framework extends this opportunity for beginning and veteran farmers to get a benefit on crop insurance for the first 5 years and extends that to 10. Can someone tell me the value of that? And I think, Mr. Rowe, maybe you are a beneficiary of that program. 5 to 10 years that make a difference in what we're trying to accomplish in encouraging beginning farmers to begin farming and to stay in farming?
Thank you for the question. Yes, sir. 5 to 10 years. That's a reasonable time based on my experience and what I see with my colleagues.
What kind of benefit does this crop insurance, what does that benefit look like to you?
So it's already a risk itself. So with crop insurance, it basically gives me a sign of relief that no matter what happens, I have someone that can, not say take care of the debt that I may have to face, but also give me a starting point to be able to move forward.
In the absence of in the absence of crop insurance, what would your circumstance have been in starting your operation? And how would your relationship been with your banker if you could have gotten a relationship with a banker?
Thanks for the question. The banker would have loved that a lot, knowing that I had a way to be able to take care of my loan. So with the crop insurance, it for me personally, it helped me when it comes to knowing what I'm gonna plant that year and knowing that I'm covered no matter what type of payment I may have. But without that crop insurance, you're really taking a big risk.
In your specialty crop world, crop insurance is working on those crops, working well?
No, sir. So the specialty crops that I grow, they don't offer crop insurance for, such as hemp. That's a fairly new crop in the state of Georgia, and a lot of crop insurance don't want to take the risk, like I say, when it comes to that crop.
Okay. Ms. Hoke, I think you testified, my notes I can hardly read, but you cautioned us about disaster assistance that damages the viability of crop insurance, that you could have a disaster program, I suppose, that diminishes the desire of farmers to purchase crop insurance and spread those risks among producers. Tell me more about that. I guess my question is, what about the disaster assistance that we provided in January, in December? Is that an impediment to crop insurance?
Yeah, thank you for the question. The disaster relief that was provided, these are critical sources of funds to farmers. They are going to help, particularly as they're looking to pay down operating loans when there's been multiple years. My point around it is crop insurance, we can't cover every single gap. We're not here for every single situation that could occur. So there are moments when disaster aid is incredibly important. My hope is that we can continue to work together to find more opportunity, to find more products that can work, that can be actuarially sound, and help cover some of those gaps so that it is distributed out in a fair and equal way through a very efficient system, which the public-private partnership has built. And it gets those payments to a farmer in a very efficient, fast, and effective way.
Are the circumstances in which actuarially sound occurs, are they increasing or decreasing?
Sorry, could you repeat that?
Yeah, the question is, crop insurance is becoming more available or less available because of the requirement of actuarially sound. Are we able to get more crops covered and be actuarially sound, or is it become more difficult? The gaps you talk about, are they increasing or decreasing?
I think that the gaps are decreasing, and we would like to see them continue to decrease more. The importance is obtaining that data underneath on the products, using the 508H process that the Act allows for, to be able to bring forth that data, to get that actuarial soundness so that you can provide crop insurance to that product.
That 508 process, does it typically, is it used to provide new insurance products or modify existing, or both?
Both.
Okay. I think those are my questions. Thank you very much. Oh, Mr. Noble, I'm saddened to hear the story that you told today. I'm sorry that you have a personal circumstance, and it is a primary reason I asked Kansans to give me the chance to represent them here is to try to make sure that rural America is alive and well. And while I don't know your family's operation well, it has a reputation of being solid and kind of pillars of the community. And it's a real the loss is economic as well as just like leadership within the community. The future of the places that most of us come from is determined on whether people like you and your family are in business and are part of a community, and I'm saddened by what you described today as occurring.
Thanks for your words, Senator. It was I appreciate that greatly. As we were able to reconnect earlier, you and I have been able to work together on ag policy for a long time, and it's great to see you in this chair, and I appreciate your comments. I'll pass them on to my family.
Please do. Thank you. Mr. Chairman, thank you. Mr. Chairman, it's a long way from you to me, and I don't really like it.
Thank you all. Thank you again for being here. The hearing today was really outstanding, and we got a lot of good information that, along with our other hearings, just kind of reinforces each other about the need to get a good, strong farm bill and the programs you describe. The need to improve on those, which again we're quite willing to do, and this is how you do it: is listening to the people that are literally out in the fields every day, trying to make a living. The answers need to come from the bottom up. So thank you for being here. The record will remain open for 5 days. Today's hearing is now adjourned.